Yes, boys, so we're here today with a 9 to 5ers guide to freedom trading Forex. It does what it says on the tin. This video, we're going to dive into a simple process that you can follow every single day to allow you to unlock the freedom that you truly desire trading Forex. It's a very simple process, and of course, it's not just as easy as me saying this. There's going to be a lot involved in it, but it's a simple process, 3 steps basically, that I would say to achieving the goals and the dreams, the desires, the aspirations, whatever it is that you want from this. It's a very simple step that you can follow if you want to become a Forex trader and escape your 9 to 5 or your job or whatever it is you're trying to achieve through being a trader. So, to become a profitable trader while you're working, it's a simple process. And as I've said, there's a few key principles that you need to follow if you are in this position. So, if you work in a job, what times are you actually able to trade? Is it going to be before work? Is it going to be in work time? Can you go on your phone? Can you go on a computer in work? Can you look at the charts? Well, if you can't, well then you're either trading at the end of the Asian session into the beginning of London Open, 6 a.m, 8 a.m. in the morning, and then that's the only time you'll trade. It's pretty simple. If you can't go on the charts in work, but you want to trade, then you need to find a way to trade before then. For me, I would suggest between 6 a.m. and 8 a.m. because when you're getting home from work, there's still a lot of volume within the market in the New York session. Because when you're finishing work, what time will that be? Say 5 o'clock, New York, dinner time or something like that in New York. But going into the Asian session, a lot of volume dips off. And you will notice that if you do some back testing, you're going through the chart and you're clicking away and you get to 10 o'clock, things start changing over, the volume drops off. It's not as good. So I would suggest between them times. Next step, a simple strategy that you're going to stick to, and do not vary between different strategies. There's so many people out there that'll try this, they'll see someone on Instagram, they'll start doing this, they'll see someone on YouTube, they'll start doing this, and you're just flicking about between different strategies and you're not getting consistent results. If you want to be a profitable trader, you need to be consistent. You can't just change things up all the time. It's not how it works. Alright? It's pretty simple. Find something that works for you and stick to it. And stick to it with a single pair. Step 3. Trade one pair. Whatever suits your way of trading, your strategy, find something that suits you. For me, it's GBPUSD. Now, at some point, I will be moving on to trading gold as well. But gold is volatile. A bit more volatile, and that is great. But for me, it just doesn't really fit in with what I'm doing. So, that's it. A 3-step process. So, decide what strategy you're going to use. Well, let's have a look at some examples of different things that you can do within your trading. So we'll go over to gold now, and this is on the 4-hour. So you can see the market is trending up. It's very obvious to spot this. It's very, very obvious. Look, we've got higher high, higher low, higher high, higher low, higher high. And let's just mark this out. So we've got a higher high. This is a key area within the market. Okay? So, anything below this, it's going to be acting as resistance. But if you break above it, that resistance then turns into support. So, if you was looking at this chart and you're seeing it's breaking out, well, you're thinking, well, it's still going up. And what you've got to realise, okay, within trading, let's see for this example here, this area, the higher low, if price is still trading above this level on the 4-hour time frame, you are still in an uptrend. So price could pump back here, okay, and reject off that, and that is still in an uptrend until proven otherwise. For example, if it did something like this, right? We're going up, and then price does this, it breaks down below there, and back up. Well then, to me, this now becomes a downtrend because price is breaking out of this key area of support. It's flipping it, just like here. It's flipping from being support, and then you're looking for that retest and then get that continuation. So, on the flip, like you can see that's happened exactly here, what's happened? Price has broke above this level, we've pulled back to get the retracement into this key area of support. What you're looking for? You're looking for momentum coming back into the market. So what you could do is you could buy here. And the reason for this, you put your stop loss there. You're going to buy here because you've had wick rejections and then you see momentum stepping back in with this 4H candle. Going for whatever you're going for, 1 to 2, 1 to 3, you'd hit target, you'd hit your profits, and you'd be on your way, la-di-da. And I know this sounds so simple with me sat here on the computer on replay mode, but it is very simple. Too many people overcomplicate things. You can clearly see prices trending up, higher high, higher low, higher high, higher low, higher high. It just makes sense. So, you know, just something to think about. You don't need to be doing all of this crazy, you know, whatever it is you're doing. Fair enough if it works for you, but in my opinion, simplicity is best. My indicators are my eyes. I see what price is doing. I see where the volume's coming into the market, and I enter the trade, and that is it. And just so you know, I would put my stop loss here because it's below structure. I'm anticipating this to be my higher low. I'm looking for that continuation. So if it breaks below this, well then I was wrong. We move on to the next trade. With that being said, let's go on to GU. And also, this is just trading on one time frame. So for all you people out there, you know, if you've not got time to be looking at the charts all the time, just trade one pair, the 4H. Get in a position, set it, forget it, crack on with your day. Crack on for a week, whatever it is, however long it takes. That's the plan. On to the next example. GBPUSD, the 1 minute time frame. I used to be a fan of this, and I'm still a fan, and I will be moving on to trading the 1 minute time frame later on in my trading career. I just think it's great. In and out, quickly, in and out. And as you can see, right, the same thing is happening on the 1 minute as it was on gold on the 4 hour. Price is trending up, higher high, higher low, higher high, higher low. You know, it's just pulling back into these key areas. Pulls back into the key area. We get a continuation. It sounds so simple, and that's because it is. Or, for example, you could trade a double bottom. Alright, so you're in the market, you can see prices create this low, we've had this big push up, we pull back, big wick rejection coming out. You have this area marked. You can see price has been trending down for a very long time. We need to get a relief in the market. You've got to remember, price doesn't move in one direction forever. There has to be a pullback at some point. You could see here, alright, we've created a level, we had a strong rejection out of it. Again, we've had a strong rejection out of this level. Well, what are you looking for? Well, you could enter anywhere you want. You could see that we've had the strong rejection. You could see that there's some momentum coming back in around this area. You could put your stop loss here. And you could go for your 1 to 2, 1 to 3, whatever you want it to be. Some might say I'm wrong. But why am I? What is right and wrong? There isn't any right and wrong. It's what works. My strategy is not going to be right for someone. Your strategy might not be fine for me. But if it works, then what's the issue? There doesn't need to be any conflict of interest. If it works, it works. As long as it sticks to the plan. Let's carry on. Let's keep looking at this chart. Where are we? Alright then, this example. Look. So, you've had your uptrend like this, whatever. You've had this downtrend forming here because if you start taking out these key areas, if you're taking out your higher low within the market, well then anything below this level is bearish. But forget that. Let's look at this. So if this was a downtrend, you've had your double bottom, fair, right? So this would actually be your your lower high. And this actually creates a lower low. So if price actually breaks out of this level, like so, like this, let me clean up these charts here. Let me get rid of that to save some confusion because in my opinion trend lines are good, but I don't think they're particularly accurate. So if you're in a downtrend, like so, just like in these other examples, lower low, lower high, lower low. If you break out of the lower high, well then the sentiment of the market is changing from being bearish to bullish. So why not take the retest? Alright, you see momentum coming back into the market. You've had a wick rejection. You had a wick rejection, a bit of bullish momentum coming back in. You could place stop loss here. You're using this as support. You've got a wick rejection, you've got momentum coming back in. Why not go for that? 1 to 3. And so on, so on. And if you look back at your charts and you do the exact same thing, you will see that there's so many opportunities where you could make some money. And just, basically that's it. You could make some money. It all comes down to what you want as a trader, the strategies that you want to trade, the time that you can put in, etc, etc. Trading doesn't have to be complicated. Trading should be simple. A simple process. A time when you can do it, a pair that you're going to trade, and a strategy. And that is it. You may not agree, but from my experience and the research that I have done and the backtesting that I have done, this is all you need. Time, a strategy, and one pair. Get to know the pair, get to know your strategy, get familiar with it, and just place them goddamn trades and stop being scared. Because if you're scared to place a trade, you'll never know. Fear not losing a trade, but never making any money. If you never place a trade, you'll never make any money, and you'll be in the same position you've always been in that you hate. That's why you're here watching this video, because it's a 9-to-5er's guide to freedom trading Forex. So get your notepads out, write it out, stick the piece of paper on your wall, or write it out on your computer, and read the bloody thing every day. And stick to the plan. Don't vary. Do not do that. It doesn't work. You might get a bit lucky. Trading's not about luck. It's about consistency. People will think you get lucky, but they don't know the work you've put in. The suffering and the pain, the loneliness, the late nights, early mornings. It's a tough game, trading. And that's why nobody makes it, hardly. If you want to be the person that makes it, be the man that does what he needs to do. So, on that note, stick to the plan, trust the process, and just place the trades in accordance to the plan. I'll see you in the next one, boys. Hope you enjoyed that one.